Like and subscribe to my channel and click the bell icon to get new video updates.
Is commercial aviation ready to hit investors' portfolios? Lufthansa is back. Those are the enthusiastic opening words of Carsten Spohr, CEO of Deutsche Lufthansa, in the European airline's earnings report for 2022, released last Friday. I think it would be just as apt to say that commercial aviation in general is back with attractive investment opportunities. Spohr reported that due to increasing demand for air travel, Lufthansa, Europe's top-selling carrier group, achieved an unprecedented turnaround in 2022. Revenue of $34.5 billion was almost doubled as high as in 2021, while free cash flow was $2.6 billion, the highest annual figure in the history of the German company. Shares rose about 5.3% in intraday trade after the news Lufthansa passed on, announced that it had ordered 22 new long-haul aircraft from Airbus and Boeing, the company's largest order since 2013. As I said before, as an investor, I like to see when a company invests in itself. It shows me that the management is optimistic about the future, and that the company is geared towards growth. This is exactly what airlines are currently doing around the world. According to Airlines for America, U.S. airlines are investing a record amount in new aircraft, equipment, information technology and more. Capital spending is expected to reach $27.0 billion this year, which would be significantly higher than the estimated $21.2 billion that airlines spent in the 2022 pandemic, could be poised to get back into investors' portfolios to land. Demand for travel is increasing as Europe, China, and other key markets have lifted travel restrictions, and meanwhile airlines have adapted by streamlining operations, eliminating unprofitable routes and more. The measures seem to be working. Although overall passenger traffic has not fully recovered to pre-pandemic levels, operating revenues are rising to new record highs, according to data from the Bureau of Transportation Statistics. Domestic airlines have managed to do this without having to cut jobs at the same pace as the technology industry. In fact, U.S. passenger airlines currently have their largest workforce in 20 years. According to A4A, Aviation is investable again. Aviation is investable again, says Jun Bei Liu, portfolio manager at Sydney, Australia-based consulting firm Tribeca Investment Partners. Last month, Jun Bei told Bloomberg she believes Asian airlines are going to go through the roof. I still agree with Jun Bei and others in forecasting a dramatic travel recovery in Asia this year, even if Chinese demand has not been as strong as expected so far. Perhaps surprisingly, European airline stocks lead those in Asia and the USA surprisingly, because there is so much negative headline news about airlines these days. But those headlines often don't accurately reflect what is really happening. European airlines were up over 41% in the 6 months to the end of February, compared to Asian airlines up 7%. And U.S. airlines down slightly -1% over the same period. I would like to briefly address something that I have noticed in the last few days. Kitco News' Niels Christensen wrote a thought-provoking article about American Eagle silver coins, which saw sales plummet last year, compared to 2021 sales the year before. As Neil points out, this decline cannot be due to a lack of investor demand, as silver bullion sales have been solid elsewhere in the world in 2022. Australia's Perth Mint, for example, sold a record number of ounces. Instead, the slump in sales is due to the 70% premium for the American Eagle coins. That is a record-breaking bounty, according to Neil. At today's prices, a 1-ounce American Eagle coin containing $21 worth of silver actually costs $35. Neil explains why this is happening. To produce its coins, the U.S. Mint purchases silver blanks from private mints, and supply may be limited. Some people have suggested that the mint should make its own silver blanks,